Hello everyone, welcome to DMVII Live for October 14th, 2017. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform due diligence prior to investing in any company. And here are the symbols covered this week. Feel free to pause the video and look up the symbols to learn more about the underlying businesses.
What I mean is, does the drip actually trigger
every quarter when they pay a dividend, I get more shares of it.
So when you mentioned you wanted to buy it at 20?
If it gets to $20, it goes. I would write them a check, and it goes into my pot of shares I already have, and they buy more shares.
But you have to monitor everything like that.
Yeah, but again, the thought on these companies is a little different. I really don't care what the price is, as long as the dividends aren't destroyed too badly. GE used to pay, I think, like $1.50 dividend at one time, and then they destroyed it because of the
2008. 2008. By the way, I just reading a book about the 5 financial crises of the United States, and said that's another powerhouse book. If anybody wants to know what's really what happened on those things, that was a good read. Wow. A lot of inside scoops of what really happened.
Yeah, GE has a wherewithal to borrow to support that dividend too. That's one of the things that they really make it a hard.
Well, I think they got to reinvent themselves somewhat. They got to keep selling things off and get a little more mean. And also, I guess when Warren Buffett pulled his stake out of it, that
so you've heard about the Internet of Things, right?
Yeah, men.
GE is about the Internet of big things, like locomotives and airplane engines that are interconnected to the internet as opposed to your car.
Mm-hmm.
So that's what they're fashioning themselves to be, Internet of big things, big engines.
Yeah, they're writing up about the MEMS
and you
technology.
see the commercials about kids going in as a software programmer for GE, not to be re-imaging.
Yeah.
As a software company, rather than a big industrial.
So that's what I was thinking, and I'm also thinking about Dominion Resources, but it's a little high right now. But if it comes back, if we have a correction, D.
Big D. That's one they have a single symbol, John.
Just D as in dog.
David.
Delta.
Yeah. There we go.
Just D. Just no letter. Just D. Just D.
I lost you. What?
D.
As in
Just D only.
That's it.
They're one of the
fourth one.
Yeah, there you go.
And they really think their dividend's somewhat conservative too for that work they're in.
3.92.
Another one too is Nancy Egg or Echo. This is the old Florida Power, and they changed their name. So she was over there. And they say this is a very modest dividend for what it's at.
2.6 yield, so that's not anything great.
So they feel that dividend should be raised as well.
Yeah, it's pretty skimpy for
what they do. So okay, that's it for me.
Tim's, you're next.
I'll put up BKU, Bank United. This is a Florida chain of banks. They have something like 94 branches in Florida.
So now it's only a 2.4 yield, so again, kind of skimpy.
And most of their businesses is with other businesses and real estate. And the growth rate has been moderate. This is kind of a conservative growth, running around 12 or 15% a year. And if you take a look at the last month or so, it broke out above a resistance level. There was a resistance level around 35, and it broke up above 35, and then it pulled back, and I bought it during the pullback, which I like to do.
When did you buy it, David?
Where?
35 is up here.
You bought it after that at around, what, 34 and a half? Or?
Yeah, something like
gap out
34 and a
there.
half. I'm a little bit underwater, but that's okay.
Yeah. It's a choppy chart, isn't it? Wow.
Well, it's not a very wide spread in the dollar range.
Chart doesn't indicate any growth.
Yeah, at the end of September, it broke up above that resistance level, which was around 35. And so
So you're saying this-
once it's in an uptrend, I'm interested, and I'd like to buy in a pullback. So that's what I did. I may have bought a bit too early, but that's okay. It's a solid company, good financials, decent growth rate, and banks are beginning to get popular. And the hurricane damage down there went right up the west coast and did a lot of destruction, and I don't know how that affects the banks. That's it. That's all I did.
Dan, you're next.
Didn't do anything. I did have a question actually, since you just raised it a couple weeks ago, because of the hurricanes, how that would affect the banks in that area. My thinking is going to be more loans, but it doesn't have to be local banks, it could be national banks. I don't know.
Stock went from about 30 up to 36 in a short time. Maybe that tells us something about just what you just said.
That the hurricane was good for them.
I know there was a play on insurance companies when the hurricane
Sure.
came,
Right.
because they were oversold, and there was an opportunity to buy travelers. Now we're talking about Puerto Rico defaulting on their loans and blah, blah, blah. I'm not sure who was involved in those defaults.
Well, banks in general are now getting bullish because,
Yeah.
We all expect interest rates are going to rise a little
Well,
bit.
the guy who did the movie The Big Short,
Mm-hmm.
The Big Short, he was asked about 2 months ago, so what's your next move? Made billions of dollars on the Great Recession. I'm as long as I can be on banks.
On banks?
Yeah.
I thought it was in water. John, didn't you say it was?
He was in water at the end of that movie, but he might have changed. You talk.
This is
right.
his commentary about a couple of 3 months ago.
This is Dr.
Yeah, the doctor.
Dr.
As long
Steve
as I can be in banks.
Murray.
Oh, you're talking Burry?
Burry.
Right, and so we're a little early because the expectation was that rates would go up, but it's still going to be low, but they'll go up. Yeah, eventually. There's some waves of inflation here and there. Okay.
I'm just thinking of this guy that you don't know if he's interested in banks. We don't know if he's shorting banks or is
As
it banks.
long as he can be in banks.
Okay.
As long as he can be. With everything on.
Was he on MSNBC or something, or Bloomberg?
Yeah, I think it was. Yeah.
Or with Kramer, whatever Kramer's.
No, I think it was CNBC. One of the Squawk on the Street or Fast Money.
I think it's in Stephen.
Dr. Stephen Burry.
And
Michael
Yeah, this is
Michael
about-
Burry.
this is about 3 months ago when we thought that rates were going to go up even a little faster than they are going now. But you see that they have been held low because of low inflation numbers, except for last month or two, we had labor rates going up a little bit. Unless, banks would give. And so the banks reported this week, by the way, real quick, the JP Morgan and Citi, they had a run up to the earnings report, then they took a dive, right? Significant dive yesterday. These people sold the news. But that's just a respite, an opportunity to pick up some more banks.
Put up Citicorp.
Yeah.
Put up C, and
Yeah,
you'll
that's
see
not-
what's
that's,
happening to banks.
Yeah, that took that had a run up and then went down on earnings report, even though it was a very good report. Right here. So took a like up to 30-minute chart. This is just the last 2 weeks. So they reported around here, and then that was profit taking there. Because if you see a daily chart, you see nothing but up here, right? Up into the report, up into the quarter report comes in, and then people sell because they're just taking profits. Your opportunity to get in, perhaps.
So is that it for you, Dan?
Yes.
Rick, you're next.
A few weeks ago, I sold my holding in Las Vegas Sands. Since then, I've had seller's remorse. So I bought back in this week. I paid $61.80. I mean,
So you're in the
they
change so
have
far?
they have a terrific.
No, they're a hefty yield, aren't they?
Yeah, they have a good dividend, but more important than that even is they have a good business model and they execute well. So
All right. it's good.
I have a question for the group. Are there any commodities anybody likes right now?
Silver.
Steel, yeah, that's a good one.
Steel? Why so?
Well, it's been performing well. I think with all the disasters, with everything going on, I think it's going to be a need for that.
Yeah,
All
also,
the rebuilding.
I remember wasn't just last week or earlier this week that one of the main steel producers in Japan had that scandal. we're talking
Kobe
about.
Steel.
Yeah. And they so because of that, maybe U.S. Steel, a lot of the U.S. Steel will be in huge demand. So
Here's US Steel right here, and
yeah, I mean,
pretty
look at
steady
that.
there.
7% on Friday.
See. Yeah, that's a gap in Friday's wages set.
So this is one of the trading that's
Yeah, that's-
jacked up. Huh?
Should have
that's
bought on
probably-
Thursday.
Very quiet, and then, wide swinging and high volume.
Should have asked that question on Thursday, Rick. We said X by X.
I'm sorry.
Should have asked that question on Thursday. We would have told you to buy X, and then you would have bought X on Thursday, and you would have had a 7% gain.
All right, I mean,
Let's be on Thursday, okay?
Yeah, I'll say silver. Silver ETF or silver futures.
SLV?
Yeah. Yeah, the rationale behind that is, of course, you always have those people that's prepping for the economic collapse and they want to buy the physical silver and keep it on hand. Also, silver is good property for a lot of the semiconductors or even for engineering applications, right? And then also, if you go to space exploration, right now there's a big interest in things like Tesla, SpaceX, and also Amazon's Blue Origin. Silver, they oxidize when there's oxygen, but in space, they don't. So it's a great application for space if we ever go out there. Silver is going to be in huge demand.
How about lithium?
Yeah, that's what. I mean, right now the biggest lithium mining place is in Indonesia, I think. Right? Is it?
Maybe.
Yeah. So I was also looking at some Indonesian here, but then, I don't know how trustworthy that is.
so is that it for you, Rick?
Yes.
Michael, you're next.
PCI. Would you please do the PCI? A couple of months ago, you talked about it, and I bought some.
Huh?
This is not a wild stock or anything.
No,
it's
it's
closed-end
not.
fund.
Whoa.
Now,
Definitely not.
I bought it. Of course, it's done very well in the past few months. And not just this curve, but also they pay.
I mean, that's
monthly.
You see, that's the chart doesn't show. I mean,
Right.
I mean, is this
So it's a
showing-
funny
oh,
chart.
Yeah, dividend 8.5%. That's what they pay. They
They
just
do.
pay out and pay and pay.
Right. So every
That's what
month.
they-
So I've been very happy with it. It's not. Don't expect very much
I mean,
more.
it's not going to move.
Right.
I mean, you're
Not
not going
going-
to get the hot,
But every month
there's
there's-
charts.
I always have this little float in my business where some money that I need to do something with it for a few months and stuff. So I put half of it in here and I said, my God, I don't need to be in any other business. This is fine. Can you maybe name, Gary, couple of respectable names in the closed-end funds? Just respectable name, whatever that means, that the industry thinks are well regarded.
CET? Is it,
C-
you like that one?
Yeah, I mean,
Just
that's not going to
any-
give you. CET is more of a. These closed-end funds, they're old man's investments, and I just super boring.
But the old men, in some cases, do better than the young ones.
I'm not saying about that, but I'm only saying they are really boring.
Yeah, which is okay. I'm there in the same
You
category.
like
My point
Making
was
money
only.
is never
My point
boring.
was,
Yeah.
I would have never, no tools that I had,
Yeah.
I would have never gone to BCI. I would have never done. My point was only one. If somebody asks you, my God, I don't know anything about the stock market, can you tell me how I could invest? I'll say buy SPY. Just that kind of a thing. Any other respectable names that you can think of?
NWL's a little high now, right? NWL? Didn't you like NWL? Nancy,
I don't know what that one is.
I thought that was one you liked.
Okay,
But it's
so
a little
if you have
hot.
one, fine. If not, that's okay. We
Yeah,
could,
well, I mean,
Maybe
Just
do also-
respectable name.
I did also like, it's more
That's
speculative.
not it, I
like
guess.
That,
That's
now
not.
it's Next Point. That's I guess the one I think that's NHF. There's an
That's
NHF.
it. NHF.
Yeah, I kind of like that's
NHF.
more exotic. That's more.
But you thought it was a little high right now, right?
Well, it's that's been a little hot.
Okay,
I'm like,
that's fine.
That's hot for an old man. That's pretty
Just
hot.
No,
wanted
but
to
I
see what
mean,
it
I
was.
thought when we spoke, it'd be
I
maybe
think it's
if you could
more
get a little
there.
lower though, wouldn't you want it
Wow.
at 20 or?
I think even at this is going to be some more here, but
10%
that's just a
yield on
guess.
that.
Yeah,
Okay.
that's it. I'm sorry, it was NHA.
Yeah, okay, now that
NHF.
was they're paying 10. All right, so I'm like,
Yeah.
these guys, they just, it's old man. Just pay,
Okay.
pay. And that's what they do. They just pay out.
These are closed
So-
funds?
NHA, was that the ticker?
NHF.
NHF.
But, they're on the more the exotic end. They stretch out stupid stuff. A lot of people don't like this. They'll get an American Airlines. No, who wants to touch those babies? They do. That's kind of their business.
Well, they came up in a conversation because we got into the biotech, and they somehow gotten that, and that's
Yeah, I was
Right.
impressed by that. They were sort of moving off into the.
when we
That's
we
right.
spoke about a biotech
Yeah.
group here for a while. Maybe it
Right.
was you. It might have been her talking about the biotech. I don't know, but
They had a little piece of some biotech outfit.
Okay.
I'd never heard
So
of.
Gary, this is a closed-end fund?
Yeah.
Look how level that chart is on
Well,
Wikipedia.
they're just pay.
It's for
That's-
dividend.
That's what they do. They just pay out.
What are the risks on this, though? Huh?
American Airlines could go bust, or they could get.
Well,
And then they got to be legal battles over
that's amazing.
getting paid off and all that.
yeah, we talked
All
about
kinds of
Well,
stuff.
that-
in
that's
there.
a downdraft right
we
there.
talked about NHF on
Well,
9/23.
They had a rights offering there. I think that might have. That actually was on the juicy side too, but it doesn't look like in the chart. But
Okay, just wanted to see a couple of names,
that's that's for the old man. That's
So that has worked out.
Hot.
I wouldn't take that approach. Reason for that is that if the money's sitting, whether you are 20-year-old or 80-year-old, doesn't make any difference because I've seen a lot of horrible 20-year-olds who are doing stupid things left and right. So it's really
You're
not,
only
not
young
that
once,
good.
Michael.
Yeah, but no, I looked at it differently. But
That's
anyway,
stupidities
You're
for
old,
so
us.
that's
the
very
rest of
good. Now, let me give you a young man's job. Let's look at Netflix.
Oh man.
Here's young man stuff.
Yeah.
And
Now you're talking.
this thing here, I am always long or short on this thing, and Monday is the earning call, and they're expecting some wild stuff on that on Monday. If you look at it, maybe 10-year, you will see this is as wild as people you can imagine. This is the only thing I want to share here. I cannot add anything to it. Those of you who were not active in 2000 or 2007 or 87 and wanted to see what market does to certain securities just before a disaster, you should engage in a discussion of Netflix. This is how horrible, he's laughing because we've talked about it before, this is how horrible the company is, if you ask me. Depends on how much they owe, what they do, how they earn their money, and all that kind of stuff. But this is so wild, $4, $5, $6 a day, every day for no reason at all, and silly news. You listen to the analyst. Oh, they got more subscribers. Okay, good. $5 up. Oh, Europe is going crazy. $10 up. It's just like that baseless stuff is happening. But anyways, I'm long and short on that thing. It's very easy. It's not for everybody, but let me just get it out. You can be long and short on this thing very easily. The reason for that is the option premiums are so wild the $4 or $5 risk here and there is okay. Even if you lose on Friday, something will expire. I've been trying to buy this thing at 175, 180, 185, 190. Every week the options expire. And so anyways, this really, I don't know, nobody knows what's going to happen to the market, but this thing is one of those stocks. I could name a whole bunch of them in 2000 that I was involved with before the market crashed. I'm not saying market crash or anything, that they were saying silly stuff about companies that have a business that you can see. It works, but stock performance is irrational. Anyways, that was just the example of the irrational. And I will just make one more point about something else, and then this is it. As when we buy things, we look at charts, they're going up, and we look at the performance and everything else. We normally look at 1 year, maybe 5 year, 10 year, and so on. Since the market has gone wild in the past 10 years, we're coming to the anniversary. So a lot of these charts that we see, we buy them, my God, it's wonderful, let's buy more, it's doing great. Starting, next few months and then starting next year, a lot of these ETFs and mutual funds will have dropped out the 2008 crash. It will not show up in their performance. So performance will artificially go up and give you the impression, oh my God. But the reason for that, underlying reason for that is that that's when a 10-year window skips out of the downturn. So just keep that in mind, that this is something that a lot of people do a lot of deep analysis, sort of look at these things. And Morningstar, those of you who look at it, and a lot of other things, keep that in mind, that performance, right now, no matter what you have, you buy it and it goes up. And you feel so good, my God, I'm so wonderful. But it is because the market is doing well, not the fundamentals are getting better. Like Netflix, I don't think fundamentals are getting better, but market is so crazy. So that 10-year point is coming up, and just keep that in mind. That all of a sudden things will look better than what they really are.
But
Just
Netflix, there was a report that they just had a price increase, and the market put great off it because the revenues are going to be great. The other underlying fundamental thing is that Netflix could be a takeover target.
Yes.
At this point by Disney, or because
no rational company should buy Netflix at this price.
I understand that, but at some point you have to bite the bullet, like Facebook buys White Sox for $19 billion. Because ultimately you have HBO, Netflix, Prime, and Disney, with you're going to pay $10 a month for each of those, right? There's going to be some consolidation.
I don't know, like I said, you mean.
Might buy out Disney.
That's right. Could be the opposite.
I really do not
I
have.
doubt it.
Yeah, I'm enjoying the craziness of this while I have very low level of respect as a business, because there's nothing that they're doing today that Google couldn't do or others couldn't do. Matter of fact, if cable companies like Comcast, they were smart enough, Netflix wouldn't even exist.
That's the delivery mechanism.
Right.
They're huge on content.
But that's the point. Comcast and a lot of other companies could have entered into the same agreement with these companies that Netflix has.
Well, I mean, Netflix is producing their own, which the only competitor they have is HBO.
Which is what
Amazon is also doing content, right? Amazon is doing content.
Yeah, Amazon is too. Yeah, they've proven you can do this, but it takes years and billions.
And it's not necessarily all that profitable.
It's not just the content that they're providing.
Yeah.
You also have the data that they collect from individual people. It's kind of like you fall into the Facebook realm where you have all these users go online and typing stuff, and they collect that and analyze human behaviors. Netflix is the same business essentially. They collect data, and that data can be used to understand what people are watching, what people are interested in, and thus also fed into some type of machine learning, application they can feed that data to. So I think
the biggest use of
I'm long on it, so I cannot long and short, so I cannot go against it, but it doesn't make sense to me. That was just the point.
But there is a corporate culture that you need to value in. There's a premium to Netflix you should apply, because they have a very aggressive Silicon Valley culture that's even different from their neighbors, where they think of themselves as a very lean, professional athletic team, where they will cut long-term employees if you're not pulling your weight. It's a constant churning, which Apple and Google aren't really up to speed on. Facebook is starting to do this, but be aware that Netflix is a very efficient machine. They're going to pivot whenever they
I don't
can.
want to work for them. That means I got to work every day.
Yeah, there's no coasting at Netflix. They're going to be pretty dynamic.
Jim, could Amazon buy them out?
No,
No,
Amazon.
they wouldn't.
Amazon couldn't. The only possible buyer would be Apple.
You think they want to?
In my opinion, I think Apple would be smart because Apple's media creation has been crap over the last 10 years. But I think there's an ego thing that Apple thinks that they can do it themselves. So I don't think they will.
Apple doesn't have the culture to pay so much money for things like this, or there was a time when people thought they would take over the TV, they would start making cars, they would buy Tesla. Apple doesn't have the culture.
They don't.
They feel,
they can grow it
what
themselves.
is it about Netflix that I can't do? Apple is
they
in a better
bought
position
Beats,
than
and I think
Netflix
they've
is.
regretted that to some extent. But yeah,
Apple, Disney, the big guys that media names them as buyers of Netflix. Yeah, it's just like Verizon buying Yahoo. How stupid this thing
oh my
was.
God, that was.
This is how this would be if somebody were to buy it.
They should have bought Spotify, I think, when they had the chance.
Yeah,
It's
Spotify
too
would have been
expensive now, but they tried to do it themselves, and Apple Music stinks.
Exactly.
Okay, next, the gentleman there in the corner.
All right, I actually have a couple things on Netflix. So, I think the reason it popped yesterday was because Goldman happened to come out with a report, and I mean, clearly no
They must be wrong on it.
Well, they are, and clearly there's no
Yeah.
coincidence since their earnings are
Look at just 5 days of Netflix.
Yeah.
It's not just yesterday. Look at the 5 days.
Yeah,
They're right there.
I
Every
understand.
day.
But there's another reason why I actually think Netflix is going to be a good play, because I stumbled across an article not too long ago, like maybe a month ago, and Alibaba owns, like you guys know Alibaba, the Chinese internet, kind of like Amazon. They have a lot of subsidiaries, and they own this one company called Lazada. I forget what it's called. But they just came out with their own version of Prime to compete with Amazon, because Amazon's now making a pretty strong push to get into South Asia. And part of the deal with Lazada's version of Prime, I think they're calling it Live It Up or something like that. You get Netflix for free for 6 months. Yeah. And that's an area where Netflix is not penetrated very well. Asia, China, Southeast Asia, like Indonesia, those markets. So I would imagine after their 6-month free Netflix trials, and a lot of those people are going to convert into paying customers. And I mean, if they actually get some traction in Asia, that could be pretty significant for the company, I think. But so that was sort of my 2 cents on Netflix. I do have a question if we can go back to Square, because I actually almost bought some this week, but I couldn't get myself to do it because this thing has tripled in a year, and I just want to know if the group thinks there's any more room for it to go up, because I hope that there is. I want to buy some. It's just, there's other payment processing companies out there. I don't know why this is so special. And I also don't think Jack Dorsey really knows what he's doing.
What Square does, I don't know very much about the company. A lot of little guys who work with me here and there, paint this, fix this, and all that kind of stuff. Something that they were not able to do before, they can now. With their phone, little thing sticking here, they take the payment and they pay less fee than they would pay for Visa and MasterCard. So they're happy. So a lot of users for it at that level.
But there's other companies that do, like Intuit has their own version of it, and I mean there's Venmo, like there's so many things that
no barrier to entry.
Yeah, exactly. There's nothing different.
Apple's getting into the space of person-to-person payment.
Right.
This is kind of risky.
Do you guys think it's because they're also they have this thing called Square Capital, where it's like small business loans? Do you think that's sort of unique and why it could be? I don't know. It's a stock that I've been wanting to buy, but I was looking at this thing that was $9 not that long ago, like maybe 6 or 7 months ago.
It's a very liquid stock, 7 million shares a day, a lot of interest, which makes it a little bit liquid.
Yeah, a lot of these technologies are based on captivity. Like the earlier you get them into your system, they're used to it, they don't want to change, right?
Yeah.
So at that point, no matter who comes out, at this point, it will be hard to dethrone.
So yeah,
whoever
that's the
out
only
there.
rationale I have, that they might have a little bit of a first mover advantage.
Yeah.
And then I did buy one stock this week, more of a spec play called Probe Metals.
What's the sticker?
PROBF. I bought it at $1.17, and it's been now it's like $1.23 or something like that.
There's some discussion in this group about buying stock, because I don't know, Vince or somebody says don't buy too many stocks under $10. Is that a discussion point?
Yeah,
A lot of reasons for that, but
I bought this on Monday.
But if it doubles every day, hey,
True, yeah, if it's going up.
imagine how
Is this
smart
an
you
IPO?
look to yourself.
Yeah, this might be.
Oh,
about
Is this an
10.
IPO?
No.
No, because it's, I don't see a daily or a weekly.
It's a short-term play.
Yeah, it's definitely a short-term play.
Yeah, I guess, is that a Dutch outfit, NPV, is that this?
It's Canadian.
Okay.
Yeah.
But yeah, I bought it on Monday. It's
How
up
much
6
they got?
cents since I bought it. I'll probably sell it relatively soon. But that was because I have that other mining stock that I brought up like a couple weeks ago, Klondex, which has gone up a lot since I bought it.
Do you buy 100, 200 of these things, or thousands and thousands?
I bought 1,000 of these shares.
So
and
the
then
intent
there's-
is to make a few pennies times 1,000?
Yeah.
Okay.
And then because I think this will be at like 250 in
Okay.
about
That's
a
the
year. And then Klondex with a K, that was at like $3, and now it's almost at $4. I have like 500 shares of that. I found that going through a 13F filing from a hedge fund that I follow.
Do you or do others people avoid stocks that are on foreign exchanges just because of the tax hassles?
This one's not, but Probe is.
Yeah.
You follow a hedge fund.
I
Is that a
don't.
paid service or
No,
what hedge fund is that?
it's called holdingschannel.com.
Holding.
And you can type in any stock, any ticker, and it'll show you all the hedge funds that hold it and what their positions are, like whether they're, when they bought or sold, and it's free. So Renaissance Technologies at one time owned this. I don't think they do anymore, but
I have holdingschannel.com. Okay. People can Google it, they have money.
yeah, I stumbled across it.
Uh-huh.
So anyway, this has been pretty good for me. I bought it at $3. I have 500 shares. I think the 1 year estimate for it to go to 5, it probably won't go that high. It'll probably go, at this point it's gonna break 4. It'll probably go a little over 4. So I'll eventually sell it once it's closer to 5 at some point. But the other reason I'm kind of into this stuff right now is because anytime there's any chatter about North Korea, which is like every 2 hours at this point, these stocks explode because they're mining gold. So they're sort of tangentially getting a boost because people sell their stocks and then go to commodities when, the market gets really shaky like this. So like this was up 17 cents in a day, like last week.
Yeah, they kind of magnify their moves.
Yeah.
Because if you follow GDX, the gold miners, for instance, you will not have this type of move.
Right.
Or even some other companies that I follow do not have this type of move. Gold mining. Did you have any losses that kind of? We don't want to give the impression everything you touch is great, right?
The only stock I've gotten like completely burned on, I think I put like $4,000 in it. I've basically lost it all. It's a company called Cerc, Cercor. The ticker is Cerc, CERC.
Right.
It was a biotech play, and
Biotech, yeah.
I just got burned on that. There was another biotech called Synthetic Biologics, which I was getting burned on, but now it's gone up, so I'm starting to make a little bit of money. But
Right.
I bought this thing at probably $5 a year ago.
And is there any hope that they'll come back, you think? Or-
I mean, I'm gonna hold it because I don't want to. I sort of refuse to lose all that money, but I don't see anything good happening for quite some time. This thing is like it's like dead
Because
money.
sometimes they do have trials coming up,
Right.
phase 1, phase 2. And,
They're- Type in SYN, SYN. That was one that I was getting killed for probably 8 or 9 months. and now I'm just starting to make a little bit of money on it. Like I broke even maybe 2 weeks ago.
Wow.
And now I'm making a little bit of money.
88 cents.
It went up to $1 like 2 weeks ago, and I probably should have sold it.
And these from your hedge fund holdings as well, or?
Someone told me about this
Yeah,
one.
sure. Yeah.
But I'm trying to stay away from these biotech plays, since the two that I've bought I've gotten burned on. Most of what I buy is either Chinese internet companies or just regular like Amazon, that type of stuff. And I want to buy Netflix. I've just never pulled the trigger. And now that it's at $200, I feel like I should just do it, because I don't see it going too down. And I don't see it going back to $1.70. If it goes to like $1.90 and I buy it at 200, I really don't care.
Yeah, we have a fellow here, we talked about it last week, Nazir, who does biotech investing, and we talked about that strategy. You're gonna strike out a few, but a couple will go tenfold.
Well, that's what I was hoping, but I've gotten whacked
kind
on
of
the two that I chose.
Risk that you take, yeah.
I think between Sign and Cirque, I've probably lost like $6 or $7 grand.
Yeah, you can try to take advantage of the tax. If,
Yeah,
Oh,
if you want just liquidate it
Absolutely.
before the end of the year, then buy them back.
that's what I thought about doing.
Carry it over.
Yeah, that's kind of it for me.
All right, that's it. Sanjay, you're next.
Yeah, I have only one C for cat, H, Henry, G for George, G for George.
Oh, checks.
I'm sorry, CHG.
G, yeah. Again, yeah.
Check.
Yeah, they make mostly the students, like high school, college books kind of stuff. And there's a rumor going on that Amazon is going to buy them like Whole Foods. They may, I don't know, it's a speculation.
You rent from them.
Yeah.
I felt that Amazon might buy them.
Yeah, maybe not, but still they're doing good if you see the chart.
Is this electronic or are these actual
They're,
physical books?
it's a physical book, but now they're kind of converting.
Their volume jumped here on the
Yeah.
bump.
Yeah.
So, yeah.
So this
That
company,
sort of validates that pricing.
yeah, this company I've actually used them, and my wife uses them as well right now. You have solution manuals for a lot of the subjects in addition to tutoring programs. So they'll provide online tutoring as well.
Yes.
And that's how they generate their revenue. But right now they're still not profitable, and they've been around for a long time, I think.
Oh, yeah.
Yeah, they've been around for a while.
Yeah, that's only one I have
All right.
today, yes.
Okay, Don, you're next.
I'm just monitoring DMLP right now.
All right, what's your thinking on it?
It pays a decent dividend.
That's a pretty hefty divvy, yep.
And what are you monitoring for? Entry point, yeah. Where it, have you sold puts against it? Or?
Not yet.
But, I mean, of course, that's a sign, your LP, you know what that means.
Limited. What's that mean?
Don, you're gonna share that one.
That's it.
Means K1.
I know that.
What does that mean again? Sorry.
Yeah.
I keep saying I let the software programs worry about it. I don't. Yeah.
Don's the K1 master, so what can you say?
If I could ask, Don, you had taken some interest in Newt at one time?
Haven't pulled the trigger on it.
Have not. If you could put Newt up there, I owned it, I've owned it for years. Something happened to it yesterday, I thought, just wanted to see if that scared you yesterday or not. Just one day if you have, can you do one day?
Yeah.
Just crash all
Yeah.
until noon.
And so I just wondered if you took any action, or you just say, my God, I'm not gonna do anything. Because I own a lot of that, and it's a very good company, and that dipped yesterday.
What's the story on it?
Do you know what happened?
No.
Yeah, I looked it up and I'm just, went crazy for a minute or two.
Mhm.
Company is fine, very good companies, local company, and they are, they're very good at what they do. But they have I don't know what the word is, but let's say partner,
in some South America, some country, Bongo something, and FBI raided their shop. So the company itself is fine, but one of their partners had this issue with FBI and stock went down. So this is one of those things where it pays very well, business is solid, but one of the little companies,
10% yield, wow.
yeah, and one of the little companies went through this little FBI thing yesterday, and it recovered, but that jump was a little scary for me, because I had a little bit of my W-2 income in that was spent to buy this thing. But anyways, you didn't do anything. Okay.
Now the ticker NEWT, Newt.
Newt, yeah.
They pay quarterly or
Isn't that monthly or quarterly? I think it's monthly.
So is that up in
I
for
think
down?
it's monthly. Could it be quarterly? But I think it's monthly.
No, you're next.
I
He owned it.
like those.
Yeah.
So
I
our
used to
ticker
own
is
it for some time.
UNH, United Health Group.
Oh, yeah.
Well,
Something I recommended.
I'm into that as well.
UNH is one of the only stocks that I would get involved in for healthcare.
Yeah. Fine opportunity, right, you know? Because
Yeah.
1.5% yield, so, you know.
It took a little dip, fine opportunity right there.
Absolutely, yeah.
This is on the Trump's, I'm sorry, the president's executive order to.
Got some tweets on them or something?
Yeah, we had a discussion about this, and this was a play that was based on decisions around Obamacare, so.
Yeah.
But it's went up significantly since we had the discussions.
Yeah, over the course of time, an uptrend. You know.
This is a Vince chart.
Yep.
Well, I'm not sure Vince would jump on.
Not now.
Well, Vince, you can answer yourself. He's here, the man's here.
He said that this company would like the chart, UNH.
You like this chart?
No, because look at yesterday.
Bad sign yesterday, huh?
Well, but yesterday, well, buy opportunity there, Vince. Take that.
Some bad news came
It's
out.
probably Trump.
I don't know what.
It was a Trump tweet that
Yeah.
got him, I think.
No, executive order, just to not pay, subsidize their payments to
Oh, okay.
Medicaid.
How badly will that hurt them?
It won't hurt.
No.
They're good.
That'll just raise the premiums. People won't be able, some people won't be able to pay, but others
It'll be
No,
fine.
it just
Who
makes.
knows? I
will.
mean,
Few people
more
out of
than-
insurance, that's all. Okay.
So is that it for you, Bill?
Actually, I have another one.
Okay.
This was a
Look at
recommendation from
chart.
Nasser. This is
That
Kite.
looks like there's a problem.
We all know about that.
What is
You
the,
don't know what? Yeah, I know what.
It's just like
King and
KIT.
Tango Echo.
KIT?
That's fun.
Yeah,
Not KIT.
that's it.
What did Trump say?
He signed executive order.
This is why it's
Huh?
important to
He
listen to
signed
Nasser.
executive order
Yeah.
to stop
Okay.
funding to
Smart man.
Oh yeah,
ACA.
Gap up and now.
Insurers.
Yes, I've been holding it
You
for
know,
a
a
few
lot of
months.
people
and
are,
it is,
are abusing that.
had a private conversation with Nasser, and Nasser says that it's a great stock
Okay.
if you're getting into the farmland area. And
Uh-huh.
I haven't seen any declines. It's been wonderful.
Well, I guess if Gilead is buying
I
them
guess a lot
out.
of people are
That's the
getting
180
free
is where we
ACA,
got pulled off.
right?
It's buys 180.
Oh, it's already offered?
And cut a deal now with it still has to go through, of course, but haven't paid yet.
Okay.
Everybody's agreed as far as I know.
Congratulations.
So,
I have another stock. Just this may be my last one. I like to put in. Well, I always have a lot, but I want to leave a little room for discussion. This
right,
is
everybody's
NVIDIA.
time keeps
Oh,
up.
NVIDIA,
Yeah, NVIDIA. Now, gentlemen,
is a beast.
we all know that there's people that sell stocks in our group. Noel is a friend of the group, ladies and gentlemen. And when I make a recommendation, I'd like you guys to take it seriously.
And I'll be the first one, Noel.
That's right.
I bought this at $43
Thank
due to
you.
this
No,
man.
there you go.
And this
And I wish I bought more.
exactly.
Still
John,
got it.
I was in it
Yes.
before John. So let's just keep this pattern going here. So we have a certain standard in the group when we have recommendations from various stocks. We want money makers, gentlemen. This one right
Everybody
here,
wants
this year
those.
is 77%, and it's earning more now. Listen, the risk for a lot of other people jumping in at this strike price could be high, but for gentlemen like me and John, We're doing really well. We're thinking about retiring in Bermuda. So this is, as you know, this is, people say this is a Bitcoin stock. There is no proof that this is a Bitcoin stock. This has no correlation. It's just that the technologies, it's been an underrepresented stock for years. I've been trading this stock for quite a long time, going all the way back to my early college years.
Oh, wow.
This stock has been a love-hate relationship, but when you think about what the NVIDIA chip has done for computers in general, there should be a no-brainer in this. I've heard people talk about this stock. People who talk about it haven't been trading it as long as I have. This is a stock that really has worked hard for this strike price, and it can go to the moon.
Yeah.
It's that simple. It's a reliable company. It's been around for years. There is no talking this down, and I've heard people talk it down, and that's why I'm talking it up now when those people are not here.
Some experts are calling this the Intel of the 90s is this stock. Yeah. That this is going to go up and up. They're going to corner artificial intelligence. They don't rely on Tesla. They can do anything with the self-driving cars. This is one to watch.
Yeah. But you know what happened to Intel after it?
But yeah, at a
for
point,
a long time.
Yeah. You gotta know when to get out. But they say this has a long way to go.
Well, actually, Intel's near high again.
Yeah.
And Intel is a mature company, and I got an Intel when it paid a 2-cent dividend. It now pays a $1.09 dividend. That's a drip I have, and I'm very happy with Intel. So if that's Intel and it matures,
it took 20 years to get
not that long.
Back to its all-time high.
But in its growth stretch for a long time, it just doubled and doubled and doubled.
Yeah.
It was great.
So yeah, don't knock Intel too badly.
Yeah. Well, Intel, I was going to talk about
GE.
Intel bought. And we talked about Intel in this group about 6 months ago when they bought Mobileye. That time Intel went down because they took on great debt to buy Mobileye. And we said this will eventually realize itself as a good acquisition 9 months out. Here we are, almost 9 months out, and you see it hitting the high because it's getting into that kind of autonomous driving space as well.
So we have a winner this year, and that's NVIDIA. The next stock that I'll recommend is AMAT, which is Applied Materials. This is something I've been recommending for a while. I'm beating people in the head with this.
Yeah.
This group has been interested in semiconductor companies, but Applied Materials has been blowing all of our competition and discussions around semiconductors. This is a reliable company. If people say it's large, it's going to fail. There's a lot of discussion about
it. It does have a little yield, by the way.
Yeah, holding on to certain sectors, they don't have that hold. The bottom line is Applied Materials is a household name, right? There's something, as an accountant, there's something called intangible assets, and there's also something called goodwill and copyright. This is a company that has that.
And they make the equipment to make the chips that NVIDIA and the other rest, so they're not really competitors with them. AMD or Micron actually supply them with material.
I'm saying this in reference to the loved Orbotech company that we were mentioning. This is Applied Materials is larger, and it's a better recommendation for people who are.
And it's domestic too.
Correct. Yes, it's a better choice for people who want to make money. So,
yeah, and everybody wants to make money.
Yeah.
Can you put a comparison with Orbotech? Absolutely. They're basically.
Yeah, as we heard, they're slightly different companies, right? What their space.
Well, yeah, Orbotech is a Israeli company. And, yeah.
So AMAT is blue,
Orbotech
is red.
Yeah, AMAT's been super high there. Orbotech is more of a sleepier one.
And also, I'll throw in there STM, guys. It's moved up to 20.
Oh, STM.
It's up to 20, pays 24-cent dividend.
Did you sell it?
I sold it, but I got back in at about 19.
Okay.
And, if you go on Yahoo Finance, old Paul Mammothfield is still pushing it. It's on there. It's
Which one was that?
So, STM.
Oh, yeah.
I wish I hadn't sold it because it would almost... it's up about 6 points from where I got in originally.
So I won't take up too much time because we do have a lot of people left.
Too late for that, no, they've already.
Yeah. I'll just say in closing, if you want to have an excellent Bitcoin discussion, see me after the week.
All right, yeah, because that's coming up here. This gentleman that.
We're at 5,000, are we at that?
Yeah, it's like 5,600 or something like that.
57.
All right.
You were a smile on your face there.
All right, Kate, you're next.
Okay, so one play I got out of HMNY this week, and I do want to mention. I guess there was some conversation in this group that most of the volatility happens before like 11 a.m. and so that is something that I kept in mind. So that was a good.
Yeah, you know what was the story on them, or?
Yeah, so it was MoviePass. They purchased MoviePass, which is a company that it's a subscription base, and you can pay $9.95 a month and go to a movie a day in the theaters. And so that's.
We talked about last Saturday.
Yeah.
Yeah, last Saturday, right?
Which was over here.
Yeah, that's right. I guess so. It's up from last Saturday.
So
They
it's
resolved their issues with AMC and things like that.
AMC is just kind of a sore loser. They just wish they had gotten in, so that's
Earlier.
and done that instead of MoviePass. So.
So it means it went from 15 to 35 from Saturday to Wednesday. From Friday to Wednesday.
Wow.
Is that what you got?
I got
I didn't realize that that's strong.
Yeah.
Wow.
Yeah, it was a big day trader target. I remember a lot of the forums online. It would be, oh, day trading target H, and Y was one of it. Yeah.
Right.
Wow.
And they're doing like they're selling data to different to eateries, to Uber, because you have to go to the movies to utilize this service, and if Uber knows how many people or who, then they can possibly target them with marketing opportunities or that kind of thing. That's that, and then I got into some banks just based off of Jim Cramer's recommendation. So Citi and JP Morgan.
Sure.
Okay.
We looked at City earlier.
JPM, yeah.
But he likes City above pretty much everything else. City has more potential.
That's great.
JP Morgan is 2.3, so no big difference.
Yeah, it's I think it was February here.
I'm thinking about getting into Wells Fargo also.
Interesting. Yeah. The other thing about Wells Fargo versus City is that City has potential. Wells Fargo even. Yeah, Wells Fargo still has some closets, skeletons.
2.9% yield.
Yeah.
Some legal things to get over.
All right. Is that it for you, Kate?
That is all for me.
All right. Next gentleman in the corner.
The only thing I've been looking at within the last few weeks is the insurance sector, because the hurricanes and fires and everything. So a lot of this reinsurance they got hit down. I was looking at RE, radio, echo. That's it.
Okay. Hey, you might be a military guy, huh?
Why is that?
Oh, yeah, that's the one that had the big
RE,
shooting business there.
Why doesn't it come up? RE.
Yeah, you have to type, maybe you type Everest RE.
That's the one there, right where they had all those murders and all that.
I'm sorry.
That's creepy.
EVEREST.
What is it?
EVEREST.
Like Mount Everest.
Mount Everest, like the Everest.
EB as in boy?
No, EV.
EB.
EREST. EST.
Like Mount Everest.
Sorry.
Well, Ever Bay?
Yep, Everest RE.
Yeah.
That was the first one. So they do reinsurance. It's insurance for insurance
Oh, Everest.
companies.
What was this?
So right before I think either Maria or Harvey, he went down to 211. So I was gonna buy a 211, but then it's like 3 hours after everybody saying Korea is not gonna be that bad. And
they're gonna have an earning call at the end of October, so I did bought some, but I was hoping that it would go down more, so I could buy more, but it didn't. It's just shoot up. Like,
well, there's still some upside to go there.
Yeah, because this hurricane season has been pretty abnormal, and
Okay, now this is, okay, so this is a long-term chart, a few years.
Yeah, and so, yeah, if you look at the daily here.
I've been looking at insurance for a while, and one thing I like about that sector is that not particularly the health insurance. I'm looking at property casualty insurance. I like that sector is because they constantly have money coming in. People always pay their premiums, and then they can, no matter what happens, they just, as long as they keep enough cash in their hand, prepare for the disaster. But they constantly have money coming in, and then they can invest whatever they want with your money. So if you have $100 of cash and you prepare for like a $30, $40 disaster, the rest of the $60, they call it float, and they can use it to buy whatever they want. So it's like, it's not like an annuity kind of thing, but I like the way that they can generate a lot of cash.
Notice that it's owned, 99% of that is owned by institutions. That's a very interesting fact.
Right. It just, I look at
retailers are not in it.
Yeah, so I've been monitoring like Travelers, Allstates, and then who is Progressive, RE. Now it's one thing I don't. So that's pretty much it. I don't have anything else to add. It just, I did know that the reinsurance industry is, people have different opinions. I mean, I heard like Buffett got out of the reinsurance, but he still kept all his property casualty insurance.
Yeah.
So I'm kind of in a self-debate on whether reinsurance is good business to be in or not. But I own a lot of other insurance companies, so I've been looking at this.
TRV, went down with the hurricanes, but then just shut up.
Right. It's I buy traveler because I have traveler insurance, and I just hate it. Pay the premium. So I might as well invest in them. They pay me dividend. I use the dividend, pay the premium back to them. So I just hate it. Like, my Comcast bill to keep going up, and then but I look at Comcast as a company. I really don't like them as a company because they own like a monopoly local, and it's kind of that mentality that I've been like, okay, what am I paying? I'm paying water, I'm paying gasoline, and paying internet. And look at which one of these companies I really like.
Property casualty insurance companies in the fall.
So is that it then for you?
That's all.
All right. Well, actually, Hector, we're here. You want to do anything?
Just one. If you had been at my desk on Thursday morning, I was in a fetal position, sucking my thumb, waiting for mommy to say everything's going to be okay, because I was kind of significantly invested in something I brought up.
No.
So I know.
I told you.
I'm glad you're here. But no, I've been writing calls against it, obviously, and but here's the deal, and I wonder if you have any insights into this here, because let's just do this. So there's a behavior on this. There's an ex-dividend day on October 6th. That's the gap there, ex-dividend.
Yeah.
A juicy 5.49% each and every year. And so you get that. So generally, people start selling off because they got their dividend locked in, and then it goes up, back up, right? But here it decided to go down. Why? Because the company reported ahead of earnings that they expect some losses from the hurricanes, because they're heavy in the southwest portion of the country. Plus, they own the biggest cell phone delivery system in Mexico, and they're suffering some earthquake collateral damage there. So their quarterly report is going to be a little down. Plus, as a double whammy or triple whammy, they said their DirecTV subscriptions fell off a bit more than they expected. So, nonetheless, so you can see why it was a little hurt. But so it went down 6% one day. But kind of stabilized, if you will, in the last couple, in the next, on Friday. But ahead of this is the consummation acquisition with, of Time Warner. So that's going to bring extra income, obviously, extra corporate income, 15% or more in revenues, right? So, and going to be give some cash available for the dividend to stay stable. So the big story on this is whether the dividend is going to stay stable. They have the highest rating for that dividend, very, very solid. And they will. Now, people say, well, they got trade union situations still to deal with, and pension liabilities, blah, 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 blah. So we're looking at AT&T making good on that Time Warner acquisition. They're going to have HBO with it, CNN. They are getting a lot of eyeballs on the mobile devices, so they can target. They're going to be big on AI, artificial intelligence, to discern what viewers are doing, selling that information to other people. So using hope as a strategy.
Okay.
I'm going to hold on because I don't sell low. I don't sell low. I buy low. And so we're going to see for an upturn on this, possibly in the high 30s, and we'll reassess. But thanks for listening to me because it's very therapeutic. I'll share this with you. I'm not alone. I don't think.
ATT.
That's yeah. What's that?
ATT is a sticker.
T as in Thomas.
Oh, just T. Got it.
Yeah. So, it's a $240 billion company, and they got HBO, CNN coming out. It's going to be, and so Cisco is another one, real quick, that we were talking about in the space, and then I'll leave it to the next time. I hear that.
The computer, I couldn't food.
Talking about it, .com bust. This was one of the .com bust guys. You can see there is some opportunity here.
There's a little bit of a dividend, 3.5%.
You could see this because they're more into the one-stop shop for your security, not just routing, but security, cloud, and what's called software-defined networking, which is the new age of networks where they are, instead of selling your routers, it's selling software on cloud that would behave as routers. So they're at the forefront of that. So that's an old name. That's it for now. Probably for the rest of my time.
Well, what do you think it's just going to be?
It's a solid company, solid. They're a major player, obviously a major player in the space, the major player in routing. And they, as I said, they've incorporated cybersecurity into this, so that you can come to them for not just the route, but the entire security solution, cybersecurity solution.
Yeah, I mean, if we're gonna have a discussion about Cisco, gentlemen, this is an old man's tech stuff. I will stay away from it. And
you stay away from it?
Yeah, I'll stay away from it. I actually owned it years ago and got beat up. So I mean, it's
well, that's the time to buy that. Huh?
Well, a lot of people say the driver of Cisco's their Cisco certification processes for network computing. But the whole idea that there hasn't been any disruption in the sector is really where I think that Cisco will really bomb. Because it hasn't been disrupted. This whole idea of hard technology for a router, and they have the all-in-ones now, but I mean, that physical hardware is going to be challenged.
Well, that's the point. That's why I mentioned something called software-defined networking or anything like that. Yeah. So SDN is the way of putting software, these routers, instead of selling the hard, big stack of rack height, 19 inches wide by it, you sell software that goes on the cloud, and that is your router.
Yeah. I understand. There's a lot of ideas out there, but no one knows exactly what.
But they're at the forefront of that. That's how they are shaking out the industry.
Yeah, we did talk about this early on, I think this year, and I still think the company itself is in the state where it's still trying to determine whether or not it will be profitable for the long run, because when you move to software-defined networking route, the competition just explodes exponentially because anybody can do it at this point, right? You don't really need to rely on Cisco hardware. So I think that's the state that I've been saying to sell put at 31. for a while, and that's why I actually did it for a while, and then I realized there isn't much premium there to collect, so I just stopped.
Sure.
So if you look at the narrative of this stock from an old historical IT perspective, back in the day, they positioned themselves to be a multi-billion-dollar company. Today, because they put certain features, control features into their hardware, then they created a team of certifications for individuals who can install and maintain these softwares. But unfortunately, if we look at the company today, it has not done what it did in the early 90s and the 2000s to position itself for the future. And that's what I mean, this stock is a risk. If you're looking for long-term hold, I mean, it's just, you can pick another back stop, pick Netflix.
He had to tease you and me.
Well, it does have a 3.47, as you say, an old man stock, 3.47 dividend, not bad. Right, some policy.
So is
Well,
that
thanks
it
for the point counterpoint.
Staple.
So is that it for you, Hector?
Yeah.
Is that it?
I don't want to get shut down again, so.
Oh, okay. All right, you already hurt my feelings. All right, James?
Yeah, sure. Couple things to console you about AT&T. I think that they actually do show some glimmer of hope. They're trying to do some synergy with AT&T and HBO as they cross promote their product.
They own it, yeah.
Yeah, they do it free HBO if you have AT&T Unlimited. So I think they'll be able to leverage some of their properties. So there's hope.
Thank you, sir.
And then in contrast to Cisco, I have a stock for you to look up. I can't recommend this wholeheartedly, but I want to put it on people's radar screens, but it's Extreme Networks, EXTR. Their chart looks good, and they've had a lot of growth and good earnings, but I have a friend of mine used to work for them, and it's just kind of a toxic culture. And they're big on taking over companies, so that's where a lot of their growth had come from before. So I wouldn't run out and buy them, but they've had some solid growth in the last, do a longer chart, you can see a longer growth.
Jim, what do they do?
They make, they're like Cisco in that they make network routing for companies, but it's very tailored to companies. So it's like, I don't want to say a company, but a large Chinese computer manufacturer will say, we want X performance and it has to meet these parameters. And so they'll go in and customize. So they're much more nimble than a Cisco and don't have the baggage of Cisco. But I would actually expect a company to buy this one out in just a general case. So that one just put on your radar screen.
Have they been around a long time?
Yeah, at least 10 years. And so they've been growing heavily for 5 years.
They're well respected.
Yeah, they are, and internationally so, especially in Asia, which is a good sign. But again, a little bit of a mixed bag in that I just don't trust their culture. I don't see them growing leaps and bounds for that. Changing gears then, the two stocks thanks to Noel for mentioning NVIDIA. That was the one I was going to highlight, but we talked about NVIDIA. Two other stocks that are on my screen that I'm poised to buy based on dips of the day. One is a stock I mentioned a few months ago called Kemet. KEM is the symbol. They're out of South Carolina. They have good earnings recently, and they also just announced last week some cost saving, slashing of jobs so that they can be leaner.
No yield.
No yield, but their growth is up and up and up, and they make components for cell phones, and they get good reviews. So I think that's a solid play. So I'm looking for them as a longer term hold. And then the other one I just heard about in the last.
That looks pretty. I mean, I don't know what Vince.
It's a momentum play. I agree. So it's a bit of a gamble. And then the other one was a Dollar General, DG.
General.
Yeah, that one got some recent attention from Bloomberg. And the one interesting thing that stood out in the report was that they go into markets where Walmart fails. And they fill a niche and get small margins, but keep growing and growing. And they're betting on the fact that the U.S. is going to continue to be divided and have a kind of a poor underclass to support this. So it's a sad story, but the fact is the stock will continue to grow.
They're sort of, in a way, like a TGX or Ross of clothing.
But they go into extremely like remote, like small towns that even Walmart has pulled out of. So I found that to be pretty compelling for.
I think this is a Vince chart, because Vince will tell you that, you see that apex dropped, and here it's breaking out through resistance, right, Vince? So this is a time to pick up Dollar General. You think, Vince? Right there.
Well, okay.
What do you think, Vince? I don't know.
He's not excited.
Not excited?
My general attitude is the price of a stock generally depends upon how most investors view their prospects for growing earnings. This gets back to what Noel said. Like, I can't see myself getting interested in insurance companies because they're not going to grow or grow very fast. Okay, and it's the same thing with something like this. Is that thing going to grow very fast? I don't think so.
But Slow and Steady has an argument too, right?
Yeah.
Yeah.
Got,
but the PE ratio accorded at any stock at any given time depends upon how people view the outlook for future growth. Okay? If you don't see a stock has got a great outlook for future growth, don't buy it.
But he's saying that they're going on a divided America, and that looks like that's at least 3 more years, if not 7. And so the other thing about the other thing, like if they're like TJX and Ross, they're a steady guy. They're a bottom feeder. And they're going to have, and they'll always be there, just like TJX and Ross. I mean, I could still remember Malone recommending TJX at $15.
But the big picture, though, for the big picture for the retail business is that it's dying. Okay, it is.
Oh, retail is dying.
Well, the brick and mortar side of it.
Moving online.
Yeah.
Why is that? Why is that?
Why is that? Because of all these little electronic gadgets that everybody owns now. That's where people are spending their money.
Yeah, but Vince, on something like this, those folks aren't going to be buying online, and they might not have access to online stuff.
But is it going to grow?
I mean, unless Amazon steps in there and starts going after the TJXs and the Dollar Generals, which I don't think they are. I think these guys, like Claire's Stores, will always be around and reinventing themselves and going for what is attractive at a low price.
I can tell you what I know about Dollar General. Dollar General exploded during the 2008 recession.
Yeah.
That's where its growth began. And so if we have another recession, this will be a great stock. But if we don't have a recession, then I don't know about the stock. But I mean, it's a very stable stock, slow stock.
Jim, would you recommend it on a pullback though? Maybe around 60 something?
Yeah, this and KEM, totally different domains, but I would both doing them on a pullback because they're getting pretty high right now.
60.
One thing I want to mention on retailers is that what Vincent said is correct, that there's just too much retail. This is a adjustment period. And if you want to pick the winner and the losers, your probably goes up if you buy a retailer that has its own brand. So I would, for example, Nike and Foot Locker. I mean, Nike get beaten down, but they have their own brand. Foot Locker is just a middleman. If you're a middleman, you're gone. You're just selling other people's stuff, and you compete on price, and that's it.
But the deal is, on these prices, the customers they're going after, your Nike brands, they'll be at TJX and they'll be over here if they're out of favor. That I think that such a bottom feeder. I mean, I'm not telling you to go out buy Dollar General now, but I know a great deal about TJX, and to me, they are a version of that.
Yeah.
And TJX has survived. I mean, the last 25. 30 years.
They're international too. I mean, you see it's called something else, but in England, and you see it in Australia.
I mean, can you imagine the guy recommended this at $10, $12? It was about 15, 18 years ago, and it's split since then. And it pays a dividend. I mean,
one main.
If it's another Dollar Generals like this,
one main component that I look for
What's
companies
caused
for voting
this?
is their longevity, right? So that's a big factor.
did fall
For some
down,
people,
yeah.
as long as they're
Yeah, what's
generating
caused
money,
that?
even though they're not making a lot of the time,
Mm-hmm.
the company will still be there.
1999,
It's like
see
that
what
cow
it
that
was.
never died. You just keep on milking it.
That's past.
Yeah, you don't want a company that explodes like this and then dies in 5 years, right? Because then you don't know when you should get out.
Yeah. Let's hand it up to Syed, sorry.
Okay, all right, Shahid.
Last week I've not done anything, but
I got it.
I kept my portfolio same. If I have funds, I would have bought the Square SQ.
Oh, yeah, we talked about that.
That it is little stretch. I thought of buying at 28 or 27, but still you can buy. It is 32, I think. Yeah, right. So I was keep watching from 17 onwards. Now it is almost 30.
What do you recommend?
Why do I recommend? Number one, it's a growth stock. Number two, it is an application where the small scale industries like cab drivers or anybody who is on mobile, you can pay with your credit card and you are like, on a cab or somewhere, any small thing. They have a small, like a square kind of an a device through which you can pay and also transfer the money. There are a lot of things you can. But basically it's a growth stock. Its earnings per share is increasing quarter by quarter. It's having very good potential,
You like the fundamentals?
Yeah, I like it's strong. It's fundamentally very strong as well as technically. If you look at the chart, from last 1 year, it has grown from 17 to 32. I think it's almost like more than 50%. Let's say.
Is that okay? The next gentleman next to you.
My name is Willie. My second time here, AC here, so Ryan.
Okay.
I think
Yeah,
buying anything is-
that's what we want. We want people to learn, and come and do whatever they want.
I didn't buy anything this week.
Okay. The next gentleman over there. Okay, same for you. All right. Next. Wei, I guess we're up to you now.
Oh, hey. So yeah, I also looked at AT&T this week. Got me interested actually selling some puts and acquire some more shares.
Thank you, sure. Why does pay as you want? It's kind of, I'm sorry.
It's on sale.
So the other company that I wanted you guys to look at is Olin. I remember, I think I mentioned this before. It's OLN.
Yeah.
Yeah, it's a little bit on the expensive side of things, but they supply ammunitions and also some chemical for people interested in gun products or even other explosive products.
Is that PE real?
Huh?
PE.
Yeah, it is on the
PE
high
is
side.
139, I think.
Only 139.
Wow.
But
I gotta go buy it.
But here's the thing though, like I like to look at companies that's like the arms dealer for things, right? So they're essentially, if you look at the company like what you call it, RGR and AOBC, they are gun sellers, right? So they have to get their ammunition somewhere, and people just buy one gun, they buy a lot of ammunitions, and they essentially aren't replaceable in the sense that once you shoot it, it's gone. You gotta keep on replenish them. So a lot of people are prepping for. A lot of people are also prepping for Armageddon and the next financial crisis and all that. So it's actually a good place to look at. I'm not saying that you should buy into it now, but
It's a hedge. Okay,
yeah,
it's a hedge against disaster.
Yeah. Yep. So something else that I did, I got into was it 2 weeks ago? Was the Equifax EFX?
Oh, interesting.
Mm.
He lives
Boy,
on the
you
wild
put some
side.
actually-
So you're
He likes the wild side.
So,
Look at that, nice.
Okay.
Nice gap, buying
Yeah,
opportunity.
Where'd you get in?
I got
Is that a
in
Vince chart?
twice. I got in once around 105, and I got in another time at 92. But it kept going down to like 80 something. But I just held on to it because the company. So I know this thing is not going to go down just because that's our whole financial economy is based on credit systems, right? And Equifax and the other two credit reporting agencies, they're all sharing the same data essentially, even though we get 3 different credit reports.
And
So
they're not going away.
yeah, and then there were a lot of seeking alpha article talking it down, shorting it, and bringing it all down. The way that I evaluated it was way over exaggerated. Consider how profitable they are. I mean, and then after the Senate, I think the talk. They bashed the CEO and all that. They actually awarded them $7 million, I think, contract to essentially using taxpayers' money to reinvestigate and secure themselves. So you know which. What a business.
They were hacked a second time. That's true. They were hacked a second time.
Yeah, their website was hacked actually with malicious downloads. You'll be like, oh, your Flash needs upgrade. You want to install it, and then you click it. It's some type of malware. But like the governments or whatever entity out there is on this side, so don't go against the wind. That's what I'm saying. And the other one is Shopify.
Yeah.
I think that's
I want to know about that.
You bought it?
Yeah, I bought it.
Nice.
I'm still in the water, so.
Is it a pyramid scheme?
I don't think so. I don't think it is. I actually talked to some people that work for them, and it is still a growing company. And then the valuation might be a little bit on the high side, just because there are some articles talking about their total revenue versus their sales. It's like 2 or 3 times higher compared to Amazon, but the infrastructure is still growing, right? So
with you.
Sam owns Shop.
Yeah. Oh, you do? Okay, that's good. I own them too.
Big position.
Oh, okay, yeah. So I still see they have good growth potential, and potentially having a lot of small e-commerce and mid-sized e-commerce people going on there. And so those are the two, the main ones.
What do you think about the Citron?
So I think that's just
that's both.
Yeah, it's all BS. It's like
he called them a fraud.
It might be a little bit aggressive on the side of trying to market people to list their product. Yeah, but it's not how you should be.
It's not fraud though.
Tell the people what you're talking about, because they don't know.
Oh, okay.
About this article about Citron and
so
the
that
Motley
big
Fools condemned them.
Candlestick was due to the article released by a research released by Citron Research Group, and they also released a video talking about how the Shopify is trying to sell this get rich quick scheme to all their e-commerce partners, and then they also talk about they have this like 500,000 partnerships, and how many of them are actually real, and how many of them are actually just paid by them to do the advertising and so on. And then they were trying to talk down the stock, and of course it worked, right? They already held short position in their prior to releasing the announcement, so yeah,
of course.
They did. If you look at their website, they actually did this on multiple different stocks, and some of them have been very, very successful. I think one of them was a VRX.
Valiant, but most of them have been.
Yeah, most of them have just like.
They also did this on NVIDIA too.
Oh yeah, okay.
Yeah.
So why
it didn't work?
Why does the media or the investment community give Citron so much credit then? Why do they value that what their opinion is? Why isn't their opinion like everybody else's?
Yeah, I think it's because it's maybe her mentality. Once you see somebody is doing it, and then you look into it, and then some big institution like Motley Fools, we have to investigate this, and somebody's like, there's an investigation going on, then it triggers, the flight or flee.
Well, Motley Fools came back and basically said, well, we want to look at this, and then they condemned this action. Mm-hmm. But I'm just saying, why does Citron have such power? Why aren't they any pundit like any other pundit out there? I'm asking you guys. I don't know what Citron
most
is.
of the price action happens not due to retail investors, right? It could be they colluded with some other institutional investor and just collaborating in the whole scheme, right? You don't know.
Citron.
Yeah. So it could be like, okay, I showed it before, but I'm letting you know, and you have multi-billion or trillion asset on your hands, and you can, partner up with me and try to short a company, right? So it can be like a domino effect or just a partnership, which I think is illegal, but
they do it behind the scenes. They would be like they justify it. It was like, oh, I think there's something going on there, therefore I liquidated my position, and then they bought it back at the low. Right?
So what's your time frame this way? So it's a 94.22. It's a
good hold. There really is a
long term.
See, after that long drop there, it had another gap to the downside, and now it's very tight trading range out here.
They have their earnings announcement coming up, so it's going to be trading around that tight range until further.
Because there's going to be a move up or down from that point.
Got a question for you. 8 days ago, the stock dropped 13.5% in one day. Why?
Because of this article, Cintron.
Because that article?
Manipulation.
Yeah.
But what's the article say?
It's saying that they're trying to sell this get-rich-quick scheme, and the company is fraud. It's equivalent. They will say it's worse, if not equivalent, to Herbalife pyramid scheme.
But what I'm driving at is if there weren't some validity to that critique, the stock wouldn't have done that.
There is some online. The way that Shopify did it, it's like if you go to their website, they do advertise that you can, if you sell your product here, you're successful, you're going to become.
Usually, though, a negative article about a company might cause that company to go down 1 or 2 or 3 or 4%. But when it goes down that much, there's got to be more to it than just somebody published an article.
But they're comparing this that company is comparing this to Herbalife. I didn't read in detail about it, but
I do think they were aggressive in a way. They were trying to entice new e-commerce partners, but then the overall justification for saying the company is all fraud and it's a pyramid scheme that it should be worth zero. It's far-fetched in my opinion. Like I do think they need to modify the way that they were marketing and try to comply with SEC and all this security, I guess, regulation and rules. I mean, if you look at some other online e-commerce platforms, they do the same thing. That's all they all are doing. They try to say, oh, if you sell here, you're gonna get rich, right? That's basically how you can get other people to sell their product on the website.
You're rationalizing. If a stock goes down 13.5% one day, I'm out of it. I'm not going to,
They've been tainted.
That's all wishful thinking. There's something wrong there.
Before you explained that, I thought they were a pyramid scheme. So I try to pay attention to the market, but in my head, I thought they were a pyramid scheme. So that tells you that the market might still think that.
Yeah.
Okay, Wade, is that it? I was trying to get with you too before I go on so, lady next to you?
I was looking at Shopify, so I didn't buy Shopify. But the China has a company, and the symbol is BZUN. I'm still watching that one too. That's similar to this platform, e-commerce. BZUN.
You got it. He's got it.
So I'm watching that one too. Between the two of those. And it actually dropped down to, I should have bought it probably at 24, dropped down to 24. I think it had some bad earnings and dropped for a minute. Yeah, but for the most part, I trade E-mini S&P.
This is a high volume stock.
I guess, Sam, you want to say anything or?
I recommend buying Bitcoin and Tesla.
Oh, okay.
And this concludes this week's live stream. Thank you for listening.